Pfizer reported earnings this morning of an adjusted 10 cents a share. The street was expecting a loss of 22 cents. That was on revenues of $14.25 billion. That missed estimates. Pfizer also reaffirming its guidance for the full year. Joining us to break down the results is Geoff Meacham, Bank of America Securities, senior pharmaceuticals analyst. Geoff, it's great to have you on here. It seems as if, obviously, braced for kind of a messy quarter. The company had more or less indicated where things would come out. What'd you see in the numbers of some detailing of some expected cost savings? And the company did reaffirm 2024 guidance.
Thanks for having me, Mike. Yeah, so you're right. I mean, I would say Pfizer beat, what I would call sort of a lower bar. There were a couple main products that missed, for example, Prevnar, Ibrance. But overall, though, I think the story is still about, COVID contraction and whether that matters to investors going forward.
And what's your take on whether it should matter to investors going forward? It feels as if the market is not really valuing that business all that aggressively at this point, if at all. It's obviously the valuation's depressed. I mean, what do investors want to look ahead to in terms of trying to figure out what the earnings power of the company is going to be?
Yeah, great question. I would say for sure the new launch portfolio, there are a number of new products, including the RSV vaccine that I think are pretty exciting. Also, Pfizer just closed the Seagen deal, and I think going forward, that product, that portfolio, I suspect will lead to some pretty nice upside going forward. But I think for COVID, though, really it's about life cycle management. It's going to be a continued erosion, I suspect, but there are ways to help stabilize that business, just with respect to including a flu vaccine together with the COVID product portfolio. But really, it's all about new products and new launches.
And in terms of Pfizer's product portfolio right now and things that are in development, is there kind of enough to latch onto, or they're going to have to do more M&A? How would you assess it?
Yeah, I suspect there's going to be marginally more M&A going forward. They have some interesting product categories. They just rolled out an oncology segment, or sort of restated their business. And so that's going to be the main focus going forward. Products for blood cancers and solid tumors. I suspect that is going to be a main focus for investors. And then there are some assets that they acquired through various deals in inflammation. There are some exciting therapeutic categories to come, but really it's about commercial execution going forward.
Big Pharma obviously had a kind of a rough year last year outside of Lilly. I mean, outside of anything related to the weight loss drugs. How are things set up right now, based on what we've heard either from J&J, now Pfizer? What's your preferred play in the group?
Yeah, I would say nominally better backdrop for this year for major pharma in big cap biotech. The Inflation Reduction Act was really in the headlines a ton over the past couple of years, and this year there's not a lot of headwinds from that perspective. From a growth perspective, our favorites are Lilly and Merck and big pharma, and then Vertex and Gilead in biotech. Those are our favorites. We're kind of sticking with mostly the growthier names for this year, but in an election year, though, no one really loves the space, and so I think it's better to stick with kind of the faster growers that have their own fundamental story and not are solely dependent on kind of the macro.